At certain point of time in life, getting access to credit can prove to be extremely helpful, particularly when your bank account is not quite adequate to handle the massive expenses. It is also handy if you are ever faced with a last-minute urgent cost that you need some financial support with. There are several credit products out there, but today let's concentrate on the two major ones, credit cards and lines of credit. Let us not mistake them into understanding that they are the same. People often take a line of credit to pay off their credit card debt. Yes, that's true. Under the condition that you can repay it by the due date, credit cards allow you to borrow money from the bank without paying any interest charges. Whereas with a line of credit, the bank essentially allows you to borrow money up to a certain limit when needed and charges interest immediately until you repay the same. Hello everyone, welcome back to moneypal. We regularly upload videos on money, personal finance and investing, and if you want to improve your financial health, consider subscribing to our channel and hit the like button to our video to support our channel. Let's understand both these products in more detail. With a credit card, there is what we call as a billing cycle. You essentially are borrowing money from the bank and making purchases during the billing cycle like grocery, Netflix and so on. At the end of the billing cycle, the bank will issue a statement balance for which it will allow you 21 days to repay, after which they will start charging you interest if you fail to pay back. With a line of credit, the bank is essentially allowing you to borrow money up to a certain limit. With a line of credit, the balance will essentially be the amount that you borrow. The biggest difference between the two is that with a line of credit, there is no grace period and the interest is charged to you on a daily basis immediately till the time the money is paid back. Now you may be thinking, then why would someone use a line of credit, right? Well, continue watching this video as there are other ways as to how both of them differ. Number 1. Collateral. Almost always credit cards are unsecured while credit lines are just as often secured. As an example, lines of credit can be secured against a house or investments. There are benefits associated to having a secured line of credit, and to know more, continue watching this video. Number 2. Limits. Credit cards usually have a lower limit than that of a line of credit. Most people have a credit card in the range of $4,000 to $10,000, whereas lines of credits can be the range of $10,000 to $30,000. In fact, with secured lines of credits, limits can be as high as $300,000 to $500,000 and even more depending on the value of your property or assets. Number 3. Interest rates. The interest payable on a credit card is higher than that of the interest rate that is charged on a line of credit. The bank usually charges the same interest to people applying for credit cards at around 21%, whereas for a line of credit, they can be as low as prime plus 1% and as high as prime plus 15%. The interest rates on lines of credit are based on multiple factors like the credit score, relation with the bank, credit history, and so on. Another factor is whether a line of credit is secured or otherwise. Since there is a collateral asset, the banks usually offer a lower interest rate on secured lines of credit closer to the prime rate as they have something to fall back on. Number 4. Rewards. Credit cards usually have certain rewards program that you could benefit from like cashbacks, e-gift vouchers and travel rewards. No such benefits are available with that of a line of credit. These cashbacks can pile up, and if you are a cautious user of debt, you could actually make some extra money with this benefit using a credit card. Credit cards also offer insurance protection and other benefits like travel insurance, mobile device protection and others that are not available with that of a line of credit. Also, another major difference between the two is that it is easier to get approved for a credit card than getting approved for a line of credit. Also, some credit cards come with an annual fee, whereas lines of credits usually come with no annual fees. Now, no two products are the same, and both of these products have their own pros and cons. The decision-making factor in which one to use is dependent on the reason for the purchase. If you're buying something that you already have cash for and it will not affect your liquidity, use a credit card. However, if you're buying something expensive that you do not have the cash for and would like to pay it over a longer period of time, use a line of credit. At the end of the day, both of them are credit products, and therefore it is important that you be careful in going about using them, or else you would end up with debt. I hope you like this video. Please don't forget to like this video and subscribe to our channel. Thank you for watching.